This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io. Good morning, everybody. Let's have a look at some of these charts. Let's just focus on Bitcoin and traditional markets. Turnaround Tuesday, they like to call it, don't they? So let's have a little look, see which direction we're going to move today. Because yesterday ended up with this spinning top candle body for Bitcoin, which is a famous indecision types candle body. But let's face it, it's still a decent trend. And we haven't yet, just similar to the way that gold hasn't yet, retested any moving averages on this major V-shaped recovery, which was exactly as expected. I'm sorry, I can't help it. It's become something that I can't help but say. Especially when it was exactly as expected. So let's focus on the gold situation. Here we go. Gold will turn all the noise on. Okay, so the 4 hourly is now allowing us to get in on the, and I'm not suggesting you get in on this one. I've been getting out of this one rather than getting in at the bottom, out at the top, scaling out. I'm not looking to take any more positions, but what I'm saying is that moving average is catching up to price action on the 4 hourly, but on the daily, not so much the case. So we will be looking for pullbacks on any one of these charts. You can't just go up green forever. That's just not how it works. All right, you've got to pull back. Traders need to sell, just like I've sold gold, and people want to be buying back so they can continue with the trend, which is one of an uptrend, right? That's the same deal for Bitcoin as far as I can see. A very nice big bounce from this 200 simple moving average, and then just completely just shot up into the stratosphere there. And above all major moving averages, not even getting a chance really to retest and allow for any sort of movement on the way up. 4 hourly gave us one last solitary chance over the weekend, didn't it, to test these the Bollinger Band. Or was it the weekend? It's a while back now. But yeah, that's the last chance we had to get in on this before we moved to the 28. Exactly as expected. I'm sorry, can't help it. So now if we focus on this 4 hour, it's looking a little different, as we have now not closed, but we've actually pierced the Bollinger Band center on this 4 hour. First time we've actually had a wick below here since we reclaimed it back down here at 20,300. So subtle change of behavior there. It's still a very bullish chart, so let's not get too scared or afraid. I know it's a bit early for Noob Master, but when he wakes up and sees this, he will be, there will be problems. Probably get bought up, to be fair, but at the moment it's slightly early on in the morning to make any kind of decisions. So based on the Bitcoin chart, it's a bullish chart, and it will only start to be bearish if we start closing below 23,000, 24,000. I will start to flip again. But again, I'm still in favor of this alt season rotation. That is still the major state of play. Doesn't mean that it has to happen from your USDT pair. It would likely happen from your BTC pair. And so all of that is still in play. At this point now, just to recap, bought Bitcoin on this first major drop here. That's where I bought a considerable amount of Bitcoin. 20% of my available fiat and tether went into Bitcoin at that level. And now I'm using that, which is what I bought for trading purposes, to scale into altcoins, and at the moment I've done two deployments, both of 10% each. 10% of that Bitcoin that I bought around here, and another 10% yesterday. So I'm at 20% of my Bitcoin bought at 21,000 has now gone into certain altcoins for this rotation. And the higher we go on the dominance chart and the lower we go on alt to BTC pairs, the more I will deploy, and probably deploying up to 50% of that overall. So let's have a look at traditional markets then a bit closer. Euro looking all right, to be honest with you. It's not looking too bad. There is obviously this whole situation with the ECB and what they're going to do, what they're going to say, because they are in a bit of trouble, right? Serious trouble really. Inflation's high. They've projected they've told everybody they're going to do 50 basis points forever until inflation comes down, but by doing that they're going to cripple their own banks. So it's going to be an interesting situation really to see what they are going to do, and the impact of that will be seen on the euro, which will be felt across the board for euro pairs and obviously Dixie. You know what? It is in their hands. Well, what are they going to say? I really don't know. To be honest, I really don't know. I have no idea. I would be very surprised to see them continue with this 50 basis points, considering the dramatic effect it's going to have on their, well, the European economy, really, especially, you know, obviously with their banks. But they might do it. I just don't know. I really honestly don't know. But for the moment, we're taking this on face value with the range that we're seeing, the bottom being the 200 exponential, the top being the Bollinger Band. And so as we get closer to the top, or maybe we even could consider this a top of the range as of yesterday, maybe we should expect ourselves to see some downside today, maybe to 106.2, 106.3. We'll take it to a 4 hourly, just have a look at that. 4 hourly still good to 106.6, so there is a fair bit of support below us, so maybe this actually does break out of this range. Thinking about itchy cloud signals and setups, we got a pump signal around this level, which is just below 106.5. Again, it's only a 4 hourly pump signal. Again, I'm more inclined to expect this range to continue rather than a breakout or breakdown at this point. But again, you know, ranges will break. Really, when you're thinking about the ECB being in control of this specific chart, which they are right now, it's probably better to be safe and play the range. And so if that's what we're doing, we're at the top of the range now. So maybe expect a pullback, at least into the Bollinger Band Center, which isn't huge, but it will have an effect. The situation going on over here for the S&P. So we're looking at S&P Futures first. We've moved up towards the top of this trend line. We broke down from this trend line. We've come up to test it a few times, got rejected from it. We're at the top of it now. It's stronger than you'd expect, to be honest. It's not really bad or anything like that. It's quite neat and tidy. It does look like it has the capacity to try and break out from here. But if it were to do that, the first thing I would focus on would be a death cross retest, which is a nice psychological number of 4,000. So again, you know, reclaiming that 4,000 has every chance of actually going back up. And if that's the case, we'll turn our attention back to this range where we could consider this descending channel. And maybe give ourselves up to a 2.5% boost from where the price closed yesterday. So yeah, not too bad, I have to say. So it's actually not too bad on the S&P. Yeah, decent reaction yesterday. So maybe we do get continuation up to that level. A breakout from there would be great, but until that, I would say probably just that level, just above 4,000. So there's a fair bit between 4,000, 4,033. It's not much between it. And that's what I'll be looking for. Now, obviously, we've thought about gold already. And the dominance chart, smack bang in the middle, this is exactly the same place that I deployed the 10%. So, well, it is basically not too different from yesterday. The only thing that we should be thinking about is that Bitcoin could and should really, in many ways, we should see and expect to see a pullback into some of these moving averages on a daily at some point. Well, we haven't had any of that really. It's been so bullish that any one of these moving averages, including the 7 simple moving averages sitting around 26,700, could get picked up. That is what happens when you have very bullish trends like this. Let's face it, this is an epic V-shaped recovery, and we've not had any retest of this daily on any aspect of the moving averages moving up. So, you know, when you get something so bullish, and equally when you get something so bearish, yeah, the highest term moving averages, well, the lower term technically, are the ones that you'd expect to see get tested, because people are just so willing to buy the dips. And they'd be more willing to buy the dips at this stage now, because we actually did close our first time above this 200 simple moving average since we lost it back down here, which was again a bit of a big problem. So this is a decent closure. And if we come down to 25,500, which is exactly where that is right now, that would be an epic buy. And that will be a buy that will be seen across the board, not by just you and me and other retailers, but larger players. Because this is where you want to invest in something for a long-term investment. You want to be buying when you're above a 200 weekly moving average, right? It's like the line in the sand. You know, are we expecting further upside, or are we expecting further downside? You know, I would expect further upside while being above it, and always expect further downside while being below it. Again, on a long-term time frame, we boil this down on a daily basis using a variety of other methods to work out if we're going to go up or down while being below the 200 exponential. Otherwise, we wouldn't have called the bottom, and we wouldn't have called the top. well, the top, I say, we wouldn't have been able to get our way all the way up here, which incrementally we've managed to do. But, you know, if you're really just sitting back, there's a rule of thumb. If you want to buy into something, are you above that 200 weekly? Yes. Okay, well, then it should be okay for the long term. Are you below it? Okay, probably best to wait until we reclaim it. So larger money will see this as a building block, just as we do on all the other time frames, to build a position in it, really. And I expect that they will. Now, that's basically all I've got for you today. There's not really much more to say about any of this, but what I would say to you, though, is I see on Twitter and sometimes on my own Telegram people getting very, very scared about the banking situation, right? And that it's going to be worse than 2008, right? It's not, right? I'm just going to put it out there. It's not going to be worse than 2008. Okay, there has been plenty of safeguards put in place to avoid that kind of situation ever taking place again. What we're seeing this time round is not the same as what we saw last time. Now, some people might say it's worse because of X, Y, and Z, but it's not. It's not worse. This is something that has been largely orchestrated, and it's almost like a ripple from the pandemic. The money printers going on, causing inflation, then the pulling the liquidity out of the system at a rapid rate, taking a lot of people off guard. We're seeing liquidations across the boards. Obviously, we all know about that because I imagine a lot of us have felt that to an extent, personally. But it's not the same. It's not the same. It's not a Jenga block, tower block built on debt. Not this time. No, it's basically people getting wrecked, and everybody effectively having their money pulled from it. It's a rug pull. It's a rug pull. So there's going to be casualties amongst that. We're starting to see that, and the Fed will prop the market up, and they will turn those printers back on if they need to. That's what they will do, because that's what their superpower is. That's why they've been doing this. They're reclaiming their superpower by raising the rates, so when the time comes, they can lower the rates to stimulate the economy again. It's not going to be a collapse. It's going to be a balancing act, and this is the first time there's been some serious pushback against the Fed's actions, and that's fine. All they need to do is pause, probably. They could even lower rates, which I don't think they will. They could just pause, and it would allow for some kind of alleviating move to continue in the markets and everything to kind of stabilize for a little bit. They can do that. Europe's slightly different, I have to say, but the Fed is the main that is the main big boy that can do it. Now, there's a double-edged sword to obviously doing that, which would be that if the ECB continues to raise rates, or if they lower rates, it depends on what they want to do, and the Fed pause, then we might actually start to see a dollar run. So the Dixie rally. This doesn't necessarily mean that you're going to see all stocks crumble as a result of that, because I know that that's, you know, some people, it's a way to oversimplify markets. The strong dollar, and everything goes down as a result. You do see that correlation, obviously, because obviously the price of a dollar is reflected against anything that's valued in a dollar. So obviously a higher dollar value will technically mean that everything else will go down, technically, but it doesn't have to be the case. So we will see what happens. We will see what happens. But I would not expect a 2008 collapse. All right, just would not expect that. Safeguards are in place. It will be pretty bumpy. It might be pretty nasty, but it's not going to end in a 2008 collapse. Okay, it's just not. It's not the same situation. So just wanted to put it out there. That is my take on it. Yeah, you can see some dumping, but you will not see a huge catastrophe like in 2008. It's just not going to happen. All right. Very, very adamant that that sort of situation will not occur, unless, of course, something happens in Europe which is significant, and then those ripples come across to the States, and that is likely. It's not impossible. It is likely, because Europe is screwed. It doesn't matter which way you cut it, but is it screwed enough to impact the American markets? That's the question. Interesting. Let's see. Anyway, I just wanted to let you know I've got a bit of a cold. My oldest daughter has now found chicken pox all over her body. I do intend to do the live stream tonight. I imagine I probably will be able to do the live stream tonight, but we will see how bad the situation gets. But it is my intention to carry on as normal. Anyway, I will leave it with you there. Thank you for watching, guys, and yeah, pump that algorithm. Pump it with pleasant, kind messages. It's very vain of me to ask for that, but it has worked, I've noticed, and I will try and make a video throughout the day as well once the American markets have opened. Long story short, I pulled back into supports. That was perfectly normal. Buyback from those supports, and then movement back up. I still believe that the alt season is tiptoeing around the corner, whether it's from this level or this level. And if it breaks out from this level, then yeah, maybe I will be creeping off with my tail between my legs, licking my loss of sats. But for the moment, you've got to play the game that's presented to you, and this game has been played pretty well, whether it's a bull market or bear market, and it's a rotation event. One last little thing as well. I'm not here to say that this is where alts will outperform Bitcoin for the rest of their lives. I've said that this is likely, if anything, going to give you roughly around a 60 something % gain on Bitcoin when it starts to move. That's all. That's all we're going to get. Yeah, that's what you should expect. Some will do hundreds, some will do nothing. But on average, we're looking for about a 60-odd% move from altcoins to Bitcoin, on their Bitcoin pairs, or just the altcoins in general. So that is not a millionaire starter kit. I said that from the start, say it again now. This is not me projecting that altcoins are going to dominate for the rest of for all eternity. It's a simple rotation on a bullish chart, which it is, and that's all we're looking for, a simple rotation on a chart which is bullish. So a sizable move, giving you roughly about 60 something % gains on your altcoins. That's all I'm saying. It's the smallest of all small alt seasons. If we compare it to the one we had last time from roughly around this level, we did manage, I said anything from between 20 to 50% should be a goal. We ended up on some of these getting about up to 200%, which again, I suppose it surprised me to see such gains, but it didn't stop the rotation being a successful one. But it did do better than I thought it would. But again, I targeted anywhere from between 25 to 50%. That's what we were saying, and yeah, we obviously got more than that. This time I'm saying roughly about 60% is what we should be looking for, top targets. But again, it can always create more. It depends on how much momentum and how many tweets the Moon Boys tweet about. Because once you start to see altcoins doing 25% a day, every other day, then yeah, it's going to cause some kind of FOMO, and that's where you end up getting the hundreds of percents. But don't target the hundreds, target the 60 odd, like I said. Anyway, I'll leave it with you there. Thank you for watching, and yeah, I will see you maybe later. Take it easy.